touch on the average premium increase across all of our clients if we aggregate the increased premiums from Integrity over to AIA.
That would be about a 42% increase on average.
Yeah.
Which is quite a lot.
Which is a significant amount. And you asked me a question.
Why is Integrity being taken over?
Okay. Essentially, they've got capital requirements to secure these policies, and they're really strict in Australia. Like, they've got to have basically a huge bucket of money to guarantee all these policies that they're collecting premiums on, because nothing worse than some policies needing to claim out, but there's no money in that bucket. So essentially, Integrity couldn't afford to keep the doors open anymore. So they had to find an option for those policies to be taken over. In Integrity's letter, they talked about they would have had to have shut down the policies in 2026 because they would have basically just ran out of money. Today, we're doing a deep dive on Integrity insurance policies. So Integrity is a life insurance provider, and they have sold their clients' policies to AIA. So all of the policyholders have been acquired by AIA. So we're going to talk about like the history of Integrity. We're going to talk about what we're doing with our clients and our policies. And then we'll talk about, what are the options out there. So today I got Neha with me. Thanks for joining me, Neha.
It's nice to be here, Phil. Thanks.
So Neha, I asked you to come here because you did a lot of the research for our clients. And so we're going to talk about like the history, which you weren't around for a lot of the Integrity history.
Yeah.
So I'll talk about that. And then we'll talk about, really, what are we doing from here? Do we recommend our clients move to AIA and stay with their policies, which we don't need to make a recommendation. They're just naturally going to go there. Yeah. Or do we actively do something about it and move away? I'll start off talking about the history of Integrity. So Integrity Life, they're a life insurance provider. Now, they started in 2018. So they are the most recent life insurance provider in the market. Now, they started in an unfortunate time where all life insurance policies dropped. So the amount of new policies being recommended was significantly reduced in around 2018, 2019. Basically, they were trading and they were setting up new policies. And we did a bit of work with them, with a bit of our clients from midway through 2020, 2021. It was a lot of our work. But then they shut down to new clients in September 2023. They had two different offerings. So one was the individual clients, which is what we help people set up. So they shut down those. They didn't bring on any new clients. The other part of their business is group policies. So if you've got 5 or more people a part of like an employer group or working with super funds, they would insure some super funds. They were still in business to try and get clients for that, but they shut down the individual policies. So that was in 2023. Something that we did in our business, we actually did a full review of our clients, like we're going to talk about, just to go, is it worth moving? Because when there's a life insurer who is shut down and not taking on new clients, it's going to be really difficult for them to be sustainable in terms of their pricing, because the only way they make money is from their current client base, and they don't care about attracting new clients. So sometimes when that happens, they can increase the premiums, but they hadn't up until that time. And so a lot of our clients, we didn't move, we didn't need to. But now what's happened?
Integrity is being taken over.
Yeah. So their policies. So Integrity, they submitted a notice of intention on the 18th of December, 2024 to have their policies acquired by AIA Australia. So AIA, one of the biggest insurers in the world, and they didn't really give us much detail. They just said, hey, it's got to get approval from the federal courts. And then, the 30th of June, our clients got email with the new premiums that they're going to be charged by AIA. Now, we work with AIA. We've got a great relationship with all insurers in the market. But those new premiums for some of our clients were pretty expensive.
Yeah.
And all those policies were moving over to AIA on the 1st of March. So we basically had a month to research the heck out of these policies and work out, do we stay with AIA or do we recommend our clients stay, or do we look elsewhere? So this is where you came in and you had the project. So talk to me about where we landed just broadly across our client base.
So we did do quite extensive research. So what we did was, compare the premiums that AIA was offering these Integrity clients. So what are their current premiums with Integrity? What's AIA saying they're going to charge once the policies are transferred over? And how does that compare with other insurers in the market? So the main thing we wanted to check was, are there any other insurers in the market that are offering takeover terms? And what we mean by that is, Are they willing to take on these policies without the clients having to go through underwriting again? Meaning you don't have to do any of those medical tests all over again.
Yeah.
Your policy, just whatever the cover levels are, whatever the terms are on that policy, it transfers almost the same way to the new insurer. So there's a couple of them, 4 of them, I believe, were willing to do those takeover terms.
Yep.
So we compared what the policies would be charged with these insurers, and also did a comparison with, just hypothetically, if these clients were to go through underwriting from scratch, do all of their medical tests again with a fresh insurer, how much would the premiums be then? And just essentially look at what are the best options available for each client. And there are a number of them here. So that's what we did in this research.
Yeah, cool. A lot of time spent by yourself, which is good. So there's a few things that you touched on. So moving across to the new insurance company with no underwriting. So when we talk about no underwriting, there is still questions that the clients need to disclose, and basically, have you had any major illness or, anything significant that your disclosure will change moving to us? If the clients say, yes, I've found out I had cancer 12 months ago, then we can't move them, but we'd likely be able to claim under that policy with AIA.
Yeah.
So there are some limitations or restrictions, but it's fairly easy compared to setting up a whole new policy. It's much, much easier.
Right.
The other thing is the policies are different, and it's very this is what I've spent most of my last 3 days at work is explaining the differences between the policies. But most of the life insurance, disability and trauma insurance, same.
Yeah.
It's just income protection is a big decision for our clients that effectively the policies are not as favourable today based on if you were to claim. It is easier to claim on these older policies than the new ones. And so that's been a big part of our work is going, yes, we can save someone money, which is always great. Cost of living crisis, we all want to save money.
Yeah.
But just be aware of what are we missing out on and what can we not get again. And so the policies are slightly different. So touch on the average premium increase across all of our clients if we aggregate the increased premiums from Integrity over to AIA.
That would be about a 42% increase on average.
Yeah.
Which is quite a lot.
Which is a significant amount. And a lot of our clients, 42% increase just because the policy is exactly the same, but moving to another insurance company is pretty, is a lot. And you asked me a question.
Why is Integrity being taken over?
Okay. At the end of the day, insurance provider, they've got capital requirements. So insurance companies in Australia for life insurance, they can't just shut down their doors and cancel the policies because the insurance contracts in Australia means that it's guaranteed renewable. So the insurance provider can't just change their mind and decide, actually, Niha, your policy, we've decided not to offer you anymore. Things like car insurance, they can do that. So you have a car crash 5 times in 1 year. They can decide, you know what, we don't want to insure you anymore. Go find another insurer in the market. But for life insurance, that can't happen. So if you claim on your income protection, you're on claim for 2 years, they can't kick you off the policy once you're back at work. So that is a good protection. But it does mean it's a lot more difficult for the life insurer. So if they're not viable, essentially they've got capital requirements to secure these policies. As an ex-actuary, you're well aware of like what capital requirements are, but and they're really strict in Australia. Like they've got to have basically a huge bucket of money to guarantee all these policies that they're collecting premiums on, because nothing worse than some policies needing to claim out, but there's no money in that bucket. So essentially, Integrity couldn't afford to keep the doors open anymore. So they had to find an option for those policies to be taken over. In Integrity's letter, they talked about they would have had to have shut down the policies in 2026 because they would have basically just ran out of money. So that's why they're being transitioned over to AIA. So there's the only thing worse than the premium increasing is getting your policy cancelled on you. That's a much, much worse outcome.
Yeah.
And you had another question before, like why did we set up clients with Integrity?
Yep.
And so at the end of the day, I can't predict the future. We do care about viability of insurance companies. And Integrity, they did acquire someone else's life insurance license because to get a license for life insurance in Australia is really difficult because of that bucket of money you've got to have. And they were running for 3 years before we started using them as a provider. And so we were comfortable starting to use them. And at the end of the day, when we look at each individual client, we look at what is the best or most appropriate insurer for you as an individual.
Yeah.
Now, we overlay thinking things like the viability of the insurance provider and everything. But in my time as an advisor, I've never had a insurance provider shut down its doors like Integrity, a new insurance provider shut down its doors. Most of the time what happens is they just get acquired or purchased. So like BT was owned by Westpac. They went and took it to the market and they sold it to Tao, another insurance company.
Yep.
So we were comfortable. At the end of the day, it's really unlikely that policies would completely fall over. And for a lot of these clients, Integrity was really well priced. When you're getting a really good deal and cheap insurance premiums, it's hard to be a viable insurance company, which is the case that happened with Integrity.
Is what happened,
and so for a lot of clients on an individual basis, Integrity was so much cheaper. And, it's hard to ignore those premium savings. Now, our clients are copping a 40% increase as a part of the work that you've been doing. Look at what other options are there. Now, I don't know if we did the math on the average difference between the best premium on the market versus the premium that AIA are charging those Integrity clients.
Yep. In fact, we did look at that difference.
It's a 2% increase if we move everyone across to the cheapest insurance provider, which, may not be possible because of underwriting. Some clients we've looked at and they can't move unless they go through underwriting. So there are requirements that these takeover terms offer where they just won't offer takeover terms.
One major factor we have to consider is there a maximum level of cover that these insurers will accept? So just as an example, a company like TAL will accept life covers of up to 3 million and not more than that. So if there's a client who has a current cover with Integrity that's more than 3 million, they wouldn't be covered for all of it under the next insurer. So likewise, there will be other limitations as well. And one major thing that we have noticed here is if a client has existing exclusions on their Integrity policy, they're likely to have the same exclusions transferred over. And there may be a loading as well, just because this new insurer will be taking on additional risk, considering you're not going to go through underwriting again or going through all those medical tests again. It's an increased risk that this insurer is taking on. So they're going to account for that in their pricing as well.
And there are some other things, like there are some of our clients, there was reasons why we couldn't do takeover terms, like there are maximum exclusions allowed to do takeover terms and things like that. The other thing to note is also it wasn't a clear win to move. Like there are some clients that are like, even though, overall it's a 42% increase, there are some clients that they're not saving money. They're still getting an increased premium, but when we compare it to the market, they're still the best priced provider in the market at the moment. So like, we've got some clients, and that was a part of, the work that we did is going, if someone's not going to save any money moving somewhere else, like someone is still, I'm just looking at it, they're still 8% cheaper than the market, even with that increased premium. And so that's where we go and have a phone call with those clients and say, yes, it's annoying we're getting that price rise, but we've reviewed the market and it's still, the appropriate.
Best option.
And so, now like if those premiums are unaffordable, let's have a chat about dialing down on the cover or making adjustments to your cover, but we're not going to look at moving insurers. And there are some other factors that we talked about that we got you to look at is also the difference on premiums, where if it was 15% cheaper somewhere else, but the income protection was the new style income protection and the client had the old style income protection, that's where we will have a chat with the clients and go, hey, does this make sense for you as an individual to stay or to move? Because yes, you may save 10%, but at the end of the day, it may be a policy you don't want to be moving to, or we wouldn't recommend you move to based on your individual situation as well. Yeah, so a client come, they've got the price rise. What are the options for them? We've kind of touched on them, but what are the options for these clients on an individual basis?
Yep. The first option could be to stay with AIA. Now, if the premiums are favorable with AIA, the client could stay with them. We've talked about that. The second option would be to go with an insurer that's offering takeover terms.
Yeah.
Like we've mentioned. So again, we'll look at the pricing and, see if it makes sense for the client's, individual circumstances. And this is where we've assessed each client individually and looked into their situation in quite a lot of detail there. The third option would be to go through underwriting with a whole different insurer who's offering the cheapest premiums in the market. Yeah.
Yeah, the same client with the same increase may have a different desired outcome. Let's say the cheapest on the market doesn't have takeover terms. They need to go through underwriting for them. One client may say, yeah, actually, I want to go through underwriting. There's actually not that much of an issue, and I'm happy to save money on that. Another client may say, I haven't had any issues, but let me just sign one form disclosing that I haven't had any issues, and let's move to the new provider. And so it's kind of that's where as advisors, it's really fun what we do in terms of going, well, for the same exact scenario, two people may have two different desires of what they want. Yeah. And also, there's a lot more work on our end if we are, doing a full review of the market, and it just takes a bit more investment on the clients to do that, and it takes a bit more investment on us to do that work in terms of the actual recommendation to move somewhere else. We may as well do a full review of their entire situation. Is the levels of cover enough as well? So some people would just say, actually, you know what? Can't be bothered. I know it's a little bit cheaper, but let's just go through these takeover terms.
Yeah.
And the other thing is timeframes. What are the timeframes of these takeover terms?
Yeah. So one company, MetLife, is pretty tight on the timeframes. We have to get this done this week by the end of February. The other insurers have given us a little bit of more time. So I think by June, we'll have to make a decision there.
Yeah. Yeah. So just to recap on dates. So what date are we today? We're to 25th of Feb.
Yeah.
So we got told about the new premiums 25 days ago.
Mm-hmm.
We had to do all this research, and one of the insurers who is the good option, as of today, they want it all done and dusted and sent to them before the 1st of March.
Before 1st of March,
And it's not a normal month. This is a short month. That's the other issue. And, just to pull back the onion as to our process, we've basically targeted the clients who were going to that insurer that has the shortest deadline. Because every client's important, but they're more important. If that's the right insurer we're looking at, then we want to prioritize those clients, get it all done and dusted. Let's hope that MetLife executive team will just snap out of their delirium and decide that, actually getting advisors to do all this work and to help their clients actually needs a bit more time. Let's hope that be the case and does give us a bit more grace. Again, we've prioritized those clients, even though other clients, they're still going to get those new premiums from 1 March or from 7th of March or whenever it is. If they're paying monthly, they're going to see those premium rises. Just the capacity to be able to do this body of work for all of our integrity clients is actually pretty significant. And I'll tell you what, I feel sorry for any advice firm who kind of dabbles in insurance, because we do this all day, every day, and we're kind of locked in, but it's been a huge body of work, and it's a lot, and it's a significant amount of work, but we're fortunate it's only 40 clients. Yeah, the body of work involved to do this would have been nice if we had a lot more time. And for our clients, I had a client I spoke to today, and she's like, is there anything I can do about it? Like, this insurance company just increased my premiums by a significant amount. Like, there's some clients that I was looking at this other numbers the other day. So their current premiums are like $5,000. It's going to 11,500.
Yeah. That was a very big increase there.
Have you got any juicy ones, any exciting increases? I mean, not exciting for the people who are getting the increase. To be fair, not to have a go at AIA, they're the ones taking on the policies. They're the one taking on the risk, because there is even one I'm looking at now. The AIA is making the premiums cheaper. Like they've done a deep dive and just gone, how do we price these policies moving forward?
Yeah.
And so it's not like they've just gone, let's just gouge these clients. Like, they've individually priced them. But just because it's fun to talk about these increases, what's the worst that you've seen?
I'm looking at one right now. The premiums for this person would go up from 6,000 to 13,000. That's more than double.
Yikes. I was looking at a 5,200 to 11,400. That's not as big an increase as your one. But as I said, there are clients who's a paramedic. Paramedics so Integrity were great for paramedics because there was some features. So own occupation TPD, Integrity offered for paramedics, and they offered income protection till age 65. So back when we were doing this analysis, like there was one insurer who would offer the own occupation for TPD, but they wouldn't offer the age 65 income protection policy. And the other insurer who offered the age 65 wasn't offering own occupation. So for some of our clients that we recommended to Integrity, it was like, you get the best features at a great price today, now moving forward. And to be fair, knowing exactly what I know now, for some of those clients I would stay. I would recommend Integrity for that period of time. I mean, if I had a crystal ball, I'd tell them not to get insurance until the day before they claim. But I don't have that. But I would still recommend some of these clients do that. But this client I'm just looking at, paramedic, $5,500 in premiums. Expected premiums with AIA is $5,800. So it's an increase, but it's not significant. Now we can move that client to another insurer, but there are lots of downsides with moving, with the income protection not being as good as what it is today. So for this client, our discussion will be, yes, there's an increase. Every individual client, even if they get like a 2% increase, they get annoyed. I always practice not saying it's not as bad as others because no one cares about anyone else's premiums. They just care about what's happening in mine. But I'll be talking to them and saying, actually, you know what, we will be recommending you stay with AIA because we've done this analysis. We can show you all the data. And again, if the premiums are too high, we can talk about how to bring those premiums down. But moving is not a great option for them. Well, awesome. Anything that I've missed in this conversation? This has been a good deep dive. I like geeking out over numbers and policies and stuff. Well, do you have any questions for me?
One general question, it could be for you, it could be for myself as well to look into later, actually. Are there any trends that we're seeing with particular occupations with regard to how their premiums are moving, going to AIA?
Oh, that's a good question. I to be honest, I've been dealing with these 10 clients. I would have assumed some of the occupations like the paramedics where Integrity were really good in terms of features and pricing, I would have assumed that the new provider would have gone and increased significantly on them because like AIA don't actually offer those features to those clients if they became a new client of AIA. So I would have assumed, well, they don't do that because it doesn't fit into their risk model. And so if it doesn't fit into their risk model on their current policies, why aren't we just completely jacking up those premiums? So I find that interesting that they didn't do that. And this is why, as advisors, like there are plenty of advisors in the market that just whinge about insurance companies. And I'm a whinger. Don't you worry. I can whinge like the best of them. But at the end of the day, we need insurance companies. We need insurance companies to be, profitable. Because if I ever claim or if you ever claim, we want the money there. And so there's always this balance between making sure that the company, like every company we work for, you want to be a customer of an unprofitable company because you're going to get a better return on your investment. But as long as they're in business, that's good for you. And so at the end of the day, we want insurance companies to be profitable. So I don't begrudge AIA, and as I said, we've got a great relationship with AIA, so we don't have any kind of concerns or issues with the policies moving to them on a macro. I think it's great. It's actually really good that they've taken on those policies. It's just on an individual client basis, we need to look at everyone on an individual and go, hey, it's not good for you, it's great for you. It's not good for you, it's great for you, and make the changes we need to make. But I'm surprised that some of those occupations that AIA don't currently insure with the features that they have as expensive.
Yep, exactly. Like you mentioned with the paramedics, we went with Integrity because they had great features for this particular occupation. And I'm seeing that AIA has maybe significantly increased the premiums for just one of them, while the others look reasonable in comparison to the others.
And again, this comes to like the discussion with I'm looking at another paramedic who, they cannot get it cheaper insurance, the same insurance anywhere else, and the policies will be worse everywhere else. So it's like, I find that, interesting. I mean, if AIA is watching, please don't go and review those paramedics. But it just goes to show that, as you said, like one paramedic's getting a big increase, but the others aren't. Like it's, when insurance companies do this analysis, it's not just what's your occupation. It's not just what's your sex, what's your age. Like all of it comes into account to determine their risk profile, to balance how do we make sure it's a sustainably priced so we're profitable, and we can continue to pay out these claims, but not overpriced where we're going to lose the policies because, you're going to move somewhere else if it's unsustainable, like if it's crazy high. Any other questions or anything else to note before we finish up?
No other questions for now.
Awesome. Well, thank you very much for doing all this work, because this is a huge body of work. And I know Seb helped you a little bit, but you mainly did it all. So it's been really helpful. And if any of our clients are watching this video, we'll reach out to you, but always feel free to reach out to us. We're reaching out to all of our integrity clients, but we're kind of prioritizing the ones that need to go to this one insurer who doesn't give us much grace, unfortunately. Awesome. Well, thank you for your time, and thank you everyone for watching.